What if your chart could tell you when a dip is a dip and when it's a trap?
Nice.
That's the idea behind Fibonacci Entry Bands by AlgoAlpha. It's built to give you a clean read on trend while timing entries with Fibonacci-scaled volatility bands around a smoothed moving average. We're going to walk through what it is, how to add it on TradingView, what all those bands and signals actually mean, how to tune the settings, and a few practical ways to use it. If you happen to find value in this video, remember to leave a like. Let's dive in. Now, to get started with this indicator, you first of all want to go to TradingView, the platform I'm going to be using. If you need to sign up, there's a link in the description for you to do that. Next, load the market and time frame you prefer. Click on Indicators and type Fibonacci Entry Bands. It's the one by AlgoAlpha. Add it to your chart and you'll see a smoothed central line, the basis, plus layered bands expanding above and below price. Ladies and gentlemen, this is the Fibonacci Entry Bands indicator. The big idea is simple. The bands are built from a volatility engine and then multiplied by Fibonacci ratios so you can read extension and mean reversion at a glance. The basis direction literally decides the trend. When the basis is rising, we treat pullbacks on the lower side with trend opportunities, and when it's falling, we pay attention to the upper side. Each band line is produced using Fibonacci multipliers, so you'll recognize levels like 0.618, 1.0, 1.618, and even 2.618, which makes timing, targets, and how stretched are we incredibly intuitive without drawing manual grids. And here's what you're looking at in practice. The center line is your trend filter, and the active side of the envelope lights up with the trend, so your eye goes straight to the side you actually want to trade. You can choose between ATR or Standard Deviation to calculate bandwidth. ATR if you want a steadier glide, SDEV if you want something that reacts faster to clustering and dispersion. The bar coloring is more than just pretty. Bars closer to the basis appear brighter, and they gradually darken as prices stretch away, while gray bars show up in ranging, indecisive conditions so you don't mistake chop for a trend. On top of that, signals are plotted for trend shifts so you'll see a long or short marker when the backdrop flips, and if price tags an outer band and starts to fade, a take-profit cross can print to hint at exits or even contrarian scouts. You'll also notice bounce or rejection markers when price taps a Fibonacci level and springs off it. Those are your better price continuation entries in healthy trends. Let's pop open the settings for a second. First, pick your volatility source, ATR for a smoother feel, or SDEV for a snappier read. Then, set aggressiveness for the TP crosses to control how early those profit-taking hints appear. You can toggle bar coloring, signal markers, and alerts, and of course, adjust the basis smoothing or the source if your market is extra noisy. I like to start with defaults, then nudge smoothing if I'm getting chopped, and only tweak aggressiveness if I'm seeing exits fired too early. Alright, back to how to actually trade this. For pure trend following, if the basis is pointing up and price is living above it, I'm waiting for a pullback into the lower Fibonacci bands. A small deceleration into 0.618 or 1.0 is perfect, and a bounce marker there is even better. I want a quick wick through the band if I can get it, then a clean bullish candle back out. That's my continuation cue. I'll usually tuck a stop just beyond the next lower band, then either scale out on the TP cross or trail behind the basis line if the move turns into a runner. One quick note on tuning. If you find yourself chasing a lot of false moves, slow the basis a touch and drop the TP aggressiveness so you don't get shaken out on tiny pauses. If you're missing momentum, do the opposite. Make the basis a hair snappier and bump aggressiveness so crosses print earlier. The idea isn't to capture every wiggle, it's to let the trend speak, use the Fibonacci envelopes as structured guardrails, and let the signals handle the heavy lifting. In summary, Fibonacci entry bands merge a clear trend filter with Fibonacci-scaled volatility so you can see entries, extensions, exits, and even do-nothing ranges at a glance. The basis defines the bias, the ATR or SDEV engine breathes with your market, the bar colors warn you about stretch and chop, and the markers, trend shifts, bounces, and TP crosses help you execute without overthinking. This is not financial advice. What I've shown you here uses indicators only. Always add your own price action or fundamental analysis, manage your risk, and test settings on your market and time frame before committing real money. If you found value in this video, remember to leave a like, or even better, consider subscribing to stay tuned. Thanks for watching. See you next time.